Howdy, howdy. It is Friday. It is the Friday lunch hour. And
That is
what else
correct.
would you be doing on Friday other than hanging out with me and Senor Francisco Ayala from the College Group? Say hello, Francisco.
Hello, hello. Thank you for having me back. We were out last week. I wasn't
Sleeping.
feeling too well last week.
Oh.
Still have a little congestion, but so hopefully I don't hear too stuffed up, but feeling a lot better. So thank you for having me back.
Yes, sir. So the crowd is cheering you on. Thank you for
Yes,
coming.
very nice. Thank you, thank you.
Yeah, everybody loves having Frank on the show here. So, but it is a lunch hour, and I am Robert Morales coming at you live here at Insider Production Studios from RCO Network. For the next 30 or so minutes, please hang in there, ask questions, give us some hearts because we love your loves. Give us some comments. We do publish this on YouTube as well. So if you're on YouTube, hit the little subscribe button and that thumbs up because, what else is your thumb doing? It's not busy doing anything. You might as well just hit the little thumbs up.
We want
thank
it.
you. So thank you.
We want to take ownership of your thumb for the next couple minutes.
Yes, we love thumbs.
Yes.
We're all thumbs. Let me see. Are you coming in? Am I getting your, oh yeah, there you are. So we're having some technical issues, but we're coming along. So Facebook has changed some things, but we're here. We're here live, bringing you money and stock tips. Those hot stocks. Bitcoin's coming back. Maybe. Frank, Bitcoin. Yeah,
Bitcoin.
maybe.
It's there. It's there. It's still sticking around.
So interesting things in the market this week. I mean, we don't get too much in the details. I think what our focus is to kind of talk about and have discussions, and we like to have discussions with you guys. So if you want to, again, go ahead and leave those comments in there. We'll kind of, chitter chatter back and forth, but we're going to talk a little bit about what's going on this week. Any news on your end, Senor Francisco, while I upload my end?
News on my end. Well, see, my news moves at a snail's pace. I'm a very, I take the long road, the long-term approach. And so it's my snail's pace, it is quite amazing. We still see some, so a lot of demand for a lot of things, and so inflation keeps on creeping higher, but so do prices, real estate prices, stock prices, all that kind of stuff. And so we'll just see how far I can go before maybe a bubble bursts or something like that.
Well, it's hard to speculate. I mean, there's two tracks regarding any kind of bubble right now. There's the ones that are like buy and hold until death do us part, kind of thing. We're going to go for the moon kind of thing. And then you have the other group that's like, oh, we're just waiting for the crash. I got my stimmies ready. I set that aside, and I got some money hot and ready for those stocks to come in, waiting for Apple to kick down to $20 a share, because currently Apple's at 130 or 135, something
right.
like that. They had they did some reporting this week. So things are going well for Apple. Maybe. I don't know. Things aren't going so well for Tesla, though. They sold off a lot of their Bitcoin this week. I don't know if anybody had heard that yet. But because I do real estate and I'm in the housing sector, I want to share a little bit of what's going on. The Consumer Protection Group proposes rule to prevent foreclosures until 2022. It's amazing how government just keeps prolonging events and pushing things aside. And, and so confident Mr. Powell is about the way things are going. Consumer confidence is high, right? People are spending, people are buying. The one kind of takeaway that it's kind of funny. We got all these stimulus checks, and to a large degree, we shop online. We don't go consumer shopping anymore.
Right.
And so a lot of our money, I believe, has gone overseas, right? Where does a lot of our products come from? They're not really manufactured in America. They go into China. So if anything, I think this is personal. This is just my opinion. We don't give financial advice. We just comment about finance. Right. So take that into account. But I believe a lot of our money has gone overseas to China, to stimulate their economy. Because, I did buy a couple things this week, and I realized that one was from Indonesia and the other one's from China. So, and which is like 90% of the stuff I have here It's all from China, or at least manufactured there.
Yeah.
So, which is kind of hilarious. So going back to consumer protection, government just keeps getting involved and it doesn't allow the free markets. And that, I think that's the most frustrating part for me as a business owner. And I'm sure you've seen it on your side too, right, Frank?
Yeah, for sure. Well, I mean, it just depends on how you feel about government involvement in our decisions, in our businesses, in our daily lives. We used to be much more capitalist society with less involvement from the government. But then that also didn't turn out to be the best of things because, we're greedy. Humans are greedy, and they might tend to abuse, the system and stuff like that, and prey on some weaklings. And so we've seen that a couple of times, and then we get these bubbles and corrections and stuff like that. And so the government comes in and, they try to intervene. The question is, how much intervention do we need? How much intervention do we feel comfortable with? We're less and less a capitalist society and more, I guess, socialist, But there's this term called creative destruction. It's an economic theory. It's called creative destruction, where in capitalism, the market itself is going to determine who wins and who loses, based on who's most efficient, based on who can produce better results, what the customers want and stuff like that. And what basically we're doing is we're saying, no, that, let's not have any destruction at all. Let's just prop these things up. Well, there's going to be no more foreclosures. There's going to be, more money for you guys and things like that. And so it's interesting to see how far the government is going to go on these things and what the result is going to be in the long run, right? I'm talking, 5, 10, 20 years from now. What is the results of all the spending, of all this propping up of the economy and of the consumers by the government,
When's the last time you applied for a job, Frank?
When was the last time I applied for a job? It's been a while. I mean, I've been working in this firm for over 80 years now. Before that, I was doing my MBA. Probably like in 2008, 2009, something like that.
Remember when we lived in Douglas? Did you ever work anywhere? I mean, I worked at Pizza Hut. I mean, that was my deal. And I remember applying and, kind of waiting to see if I got accepted. And it took like a couple of days and they finally called and said, hey, do you want to come work for us?
Right.
Pizza? Did you work at like anywhere like Burger King or anything like that?
Not fast food, but I did work retail. I worked at, it was called the Miller's Outpost. I don't know if you remember Miller's Outpost, my first probably year in college.
If anybody from Douglas out there remembers that, no, I don't.
It wasn't in Douglas. It was in Tucson. This wasn't in Tucson. It's a clothing store. Anyways, it's a retail store. But yeah, I remember that, applying for the job and waiting to hear back, yeah. Wouldn't
it be awesome if like wherever you applied paid you money just to apply? Like they said, hey, we want you to apply. We'll give you $50 if you come and apply at our
Yes, that would be awesome.
And so, I mean, as we talk about the economy and things kind of happening, I mean, stuff like this is somewhat concerning. There's a big question mark on like, well, one of the biggest, fast food retailers out there is paying $50 for people to apply, which is amazing to me.
Yeah, and I read a similar story where it was a bar owner who was giving a $400 signing bonus to anybody who would, who get hired. They would get a $400 signing bonus, and nobody would apply. And so basically, what happens is in those lower paying jobs, people don't want to get off of the unemployment benefits. Why are they going to get $50 or $400 or whatever it is and make minimum wage when the government is subsidizing all their, a lot of their living right now, and they don't have to do anything, and they can do some side hustles here and there. And so that's the consequence of having so much money thrown around everywhere, so much government involvement, of people just, having free money. It's unemployment benefits extended now until September. So they have another 4 or 5 months, right, where they can just kind of cruise and get their money, and because they're going to be making roughly the same, right, between their lower paying jobs and what the government's providing them. So yeah, no incentive at all to fill in those types of jobs. For sure.
It's amazing. Like I remember like in high school, just like begging, and wanting to. I mean, and probably because we live in Douglas, there were really like 10 jobs there anyway. But I just remember in high school, like just this anxiety about trying to find a job and not having, income, and to a point now
Right.
where like people aren't even applying just because, there's so much intervention. And again, the concerning things there's a few people, there's a spectrum of people that I think we want to target a certain
Right.
group in that spectrum, because there's people that are wealthy that are able to manage their money. They have their own businesses, they're able to kind of use some of the tax burdens or tax benefits regarding those businesses. And then we have on the lower end people that are just going to work, and even now I think there's probably a segment of the workforce that's like, hey, I'm not going to work.
Yeah.
Yeah, I'm getting Biden money here.
Yeah.
I need my stimmies.
I mean, so I think there is a need for some sort of safety net for, for some people. Yeah, people get laid off and they want, you want to be able to help them, kind of get back on their feet and stuff like that,
Yeah.
as quickly as possible. But once you start making that safety net bigger and bigger, where, a lot of more people benefit from it, and thicker, where they can stay there for a long time and nothing happens, once that safety net gets nice and big and nice and thick, then yeah, I mean, it's very comfortable just to stay there. And we start to mess more and more with what the market really is needing, right? The market needs to find its way, it needs to find its footing. And the more involved you get, then you start distorting things. You start distorting prices, real estate prices, stock prices. You start distorting all kinds of things, which eventually lead to the bubble. And you're seeing that right now. I mean, the way home prices are going up is ridiculous. The valuations for the stock market, is ridiculous. And so you're going to see more and more distortions the more and more the government gets involved, for sure.
Yeah, and the frustrating part is when you're trying to buy, even something as simple as groceries all the way up to a house, you become very frustrated because you feel like you're overspending on something. And then on the selling side, people are getting so excited about the money they're making, but it's unrealized. It's not cash in hand until they cash out.
Right.
You're up at the casino, but not until you actually go to the cashier do you really cash out. And so many people are betting higher and higher and higher, and hopefully the Wall Street casino adjusts whatever it needs to.
Right.
But out of frustration and out of need, I think the government does get involved, but I don't know to what extent. And the hard part is making predictions on what that looks like, and even further intervention. So the last thing I wanted to bring up, and I don't know if you wanted to chime in on some of the stuff you had.
Yes.
But 1031 exchanges. So that hits home for me a little bit too, for some of my investors.
Oh yeah.
So Biden targets 41 billion tax break for real estate investors. So he's targeting them. So adding taxation, getting involved in basically capital gains. So one way to defer to defer taxes on any kind of gain is through real estate. So you go and you decide, hey, I have an investment home. I don't want to pay taxes on that. I did make a lot of wealth. The appreciation of the market, appreciated, 200, 300, 400,000. I don't want to pay taxes on it. I want to roll it over to another property.
Right.
So that's essentially what a 1031 exchange is. Very simplified. You're just moving your invested property from one property to another, so you don't pay taxes on it.
Yeah. Your gains keep on getting rolled over and over without paying taxes. Right.
Yeah, and it appears that we're targeting that aspect of our markets too. And so what that leads to, I don't know. Again, having that discussion with the free market, allowing things to take place. I felt there should have been a housing crash already, just based on some of the circumstances, but we keep delaying and prolonging and delaying and prolonging.
Yeah. Well, to be honest with you, I think, bigger than the 1031 exchange proposal that Biden is offering, I think a bigger one that's going to impact a lot bigger slice of the population is a capital gains. Because what he's proposing of increasing the capital gains tax, but more importantly, doing away with a large part of the step up in basis when somebody dies. You hold some assets, right? Under the current law is that once you die, those assets get passed to your heirs, and they get a step up in basis. So they don't, there's no taxes to be paid there, right?
Yeah.
They basically start fresh with your assets. One can argue, yes, that, a lot of the very, very, very wealthy people just keep on passing assets generation to generation, and that money never gets taxed, or businesses or things like that. Think about an Elon Musk, who has, these billions of dollars that haven't been taxed because he's just basically ownership shares in his company. He dies, let's say he's not married, he passes this to his daughter. That daughter gets a step up in basis. No taxes ever paid on that thing, and then that daughter passes it to her daughter or whatever it is, right? And so you escape a lot of taxation. So yeah, you kind of thinking, well, maybe there should be some sort of tax there. But what the way Biden is proposing it, it's just going to affect a lot of the millionaires next door.
Yeah.
Those people that are not super rich, but they have, they worked hard, they save constantly throughout their lives, and they have $1 million, $2 million, $3 million. They're going to get impacted too, right? They're trying to figure out what the how much of it can be exempt. But if a couple $1 million, you're going to get hit. And there's a lot of those types of millionaires next door around us. So
Yeah, and just to remind everybody again, we're taking comments, we're taking any questions, even at the replay. So if you guys are watching us not live, on live, you can go ahead and put those comments and questions in there. We'll answer them next week. But I'm Robert Morales here from RCO Network, talking about finances with my esteemed co-host Francisco Ayala from the College Group. Answering questions about real estate, finances, but we're just having entertainment. This is not financial advice. If you listen to us, you might lose all your money. Who knows? so going back to that, I mean, so there's two parts of me regarding, the 1031 and some of the things that our government does. There's the side of me that's very selfish and says, how could you do this to me? Well, why are you taking these taxes? Are they going to be retroactive? I want to leave a wealth legacy for my children. I want to be able to move some of this stuff around, especially when I die. I want to be able to give it to, my spouse or even my kids, so that they're not, taxed on that. So there's a generational wealth gain.
Yeah.
But then there's the greater good of me, the one that goes and volunteers time at the local food bank that says, hey, there's a bigger society and there are segments of the population that need a little bit of help. And so that's always such a balance between the two. It's like, who else is going to intervene in this but the government? And what they're doing. So it's just frustrating on my end. And I don't know what's better. And do I think selfishly? Do I think about my own family? Or do I think about the greater good and the impact that my kids will have later on too? I don't know. There's no real clear answer, I think.
There isn't, but there is in the last couple of years, maybe the last 10 years or so, maybe 15 years, there's this movement among, I think, a lot of people, but in corporations too, where they're starting to see that the answer is not what we've been told for many years, which is we have to maximize shareholder value at all costs. That was our number one mission for CEOs, CFOs, and all these executive board of directors, is maximize shareholder value. What does that mean? Increase the stock price. Well, in order to increase the stock price, you have to send jobs to China. You have to send jobs to Japan because the costs are much lower there. You have to, lay people off quickly when the downturn hits because you need to save costs. And so what people are starting to realize is maybe it's not all about, shareholder value, increasing shareholder value, but it's more about finding a balance, like you just said, right? Of, yes, shareholder value is important, but who are the other stakeholders here? Who are our clients? Who are our employees? How do we treat them? What is our role with society, giving back, climate change, all that kind of stuff? And so I think, more and more people are talking about this. I know corporations are talking about this. And so hopefully, I don't know, I mean, it might be too slow, too late, to make a big difference. And that's why the government just needs to get more and more involved. But it's a very tough subject. It depends on where you are in the political aisle. It's you're gonna find a lot of disagreement on this thing.
Yeah. I mean, for the most part, I mean, I did social work for a good 10 years. And so I saw, and I worked with that segment of the population that's poor, indigent maybe. And I will say it's really a mindset and how the culture, is manifested around that mindset. Not being educated, not really giving the motivation to kind of extend themselves outside of their circumstance. And
Mhm.
how do you do that as a society? How do you do this as a government unless you impose it on a greater authority or somebody that makes money? And hey, you got to share that. But at the same time, you're not really teaching, like these stimmy checks, hands down. You're not really teaching anything with stimulus. All
Right,
you're teaching is like, hey, the government's going to give me money or the government's going to pay me out.
right.
Even some of the larger corporations like the banks, back in 2009, 2010,
Right.
they got bailed out.
Yeah.
But what are we teaching? Are we teaching people how to finance, or do we have to have a show on Facebook, on Zoom, between you and I, and share this information, and hopefully people reach out to us and ask us questions, or
Right.
just like, hey, you know what, I don't understand this. This is how I knew growing up. I mean, me growing up was like my dad saying, hey, don't be spending any money, save all your money. But
Mhm.
also saving your money, it comes at the cost of inflation, societal inflation. Everything goes up, but and
Mhm.
then the value of money goes down. So it's like,
Right.
well, I'm going to save all my money, but it's not going to be worth what it's worth.
Right.
When my dad passed, he passed, I think, with $35,000 in his account. And coming from a kid who grew up in Douglas, in a very poor family, probably making, a couple $100 a month, maybe, to when he passes away, he had a little nest egg at 35,000, and he's like, "Hey, don't tell your mom. Don't tell your mom I have 35."
Mhm.
It's
Right.
just, but he saw that as a lot, and me, today is like, yeah, that's really not a lot. I mean,
Right.
that's
Yeah.
seems like a lot, but it's not.
Imagine you going into retirement, whatever it is, and that's what you're counting on, right? Is you have the little nest egg plus Social Security. You know, it's a very, I don't know. I mean, a lot of people will probably feel scared going into retirement that way. That's all you have, and so well, yeah, it takes planning for sure. Hence why we're talking about this. It takes planning, but it also takes a lot of knowing about yourself,
Yeah,
and again about money. It's how you feel about money, right? It's how the money
yeah.
makes you feel. When does it make you, does it make you feel good, bad? What does it mean to you? What messages did you get? Like you said your dad said saving. Well, maybe another dad said, I like, because they grew up poor, they said, I want to spend it all because I don't know if I'm going to have it tomorrow. So it's all these messages that we have. So just, doing a process of self-discovery is very important, I think. Actually, if you don't mind, is it okay if I share something with you guys?
Yeah, go ahead. Let me make you a host there. Um, you're in charge, Mr. Yellow. You've always been in
Oh,
charge. I just handle
yes,
all the
yes, yes,
buttons.
yes. Now let me
Hey,
see.
Danielle, I see
Share.
Danielle's online. So
Who can share? Well, it says all panelists. Who can start sharing?
you're the host. You're the hostess with the
Oh,
mostest. You can share
okay,
whatever you want to.
okay.
Mrs. Melendrez is waiting.
Let's do it. Let's see.
She's
Which other one?
eagerly. She's
Okay, so this one here. This is
there. It
something
goes.
that we use with our clients. Do you see this? This has a color group up here. Just want to make sure they have the right screen up.
Where on the top? Yes, I see that.
Yeah, yeah, okay.
I
So
see your
this is
finger.
one of the assessments that we use for our clients in trying to discover a little bit more about themselves, right? About who they are. There's different assessments that we use, but this is one of them. This one is our investor profile report, where it tells you what kind of feelings and emotions and behaviors you have when in regards to investing. So
Yeah.
this is mine. I'm going to show you my scores. Investing confidence, obviously I'm pretty confident with investing because I've been doing this for quite a while. But volatility, I don't score too high because I still feel, the gut wrench when the markets go down, and so this is kind of trying to capture those types of things. How accepting am I of risk, and things like that, and then how quickly will I jump into action should the market turn down. This all these assessments, they try to capture that. So for
Yeah.
me, if I see the market turn down, I'm going to jump quickly on this. This is what this is saying, right? There's another assessment that I want to show you real quick, which is, give me 1 second. Let me see if I can bring it up.
Well, as you're looking that up, one of the biggest fears that I have is locating an asset class, because there's so many different things that are happening in the market. It's just, and I'll express that a little bit and let you know a little bit more about my own insight in a second. But go ahead, Frank.
Sure. And I'll just share this one too. Again, so this assessment tries to capture the behaviors that would lead you to become wealthy in the future. So this is based, again, on the book, The Millionaire Next Door. Basically, that book surveyed thousands of people and said, what kind of behaviors lead these people to become millionaires? And these people they didn't inherit the money. They didn't, they're not CEOs or anything like that. There's everyday guys, everyday your neighbors and stuff like that, that they retire and they, with millions of dollars. What type of behaviors do they exhibit? Well, this is mine, right here. Frugality. Are you frugal or not? I'm not too frugal. Based on this. Right.
You got your stimmy check. I know exactly what you spent it on, but I'm not going to tell anybody.
Exactly. So, so I'm not a very good frugal. So that's not a plus, but, me being confident about investing, me being in control of me just saying, hey, I'm going to decide my own future, and I'm not going to let somebody else decide my future. That's what this is capturing. Social indifference. Do you care about what people think about you and your brands and things like that? And, that's a low score for me. So anyways, everybody's going to be different, but the whole point is recognizing all this stuff. Right. And that's what we try to do with our clients, is try to capture all these things that can influence their investment making decision and their ability to create wealth.
Yeah. And so again, if you guys have any questions, you go ahead and ask myself and Frank here. We're answering questions. We're not financial advisors. Well, one of us is, but not on the show. We're just entertainers. Right. So if you want to reach out, you can leave your comments or questions in the comment section below, and we'll get to them either live on the show. If you're watching us on the replay, go and hit that. Give us some loves. If you see what you like what you're seeing, just give a little love, because I love it.
If you like what you're seeing, if you see what you're liking,
yeah, whatever. If you like seeing Frank, if you like seeing two bald guys, hit the little love button or a little support button, whatever. But at the end of the day, so we're coming up to the end of the show. We got about 4 or 5 minutes left. I am concerned about my asset class. So I am somewhat of a mindful investor, and I see my money been growing over the last few years, especially since we had our talk. Mm-hmm. Again, to reiterate, a few years back when I was getting a divorce, me and Frank sat down and said, "Hey, you need to work on your financial planning." And I said, "Sure." And he was the guy that pointed me in the right direction, and more so as a friend. And that's why I have you on the show, and why we're connecting this way, because you always extend yourself as a friend, and you're always helpful in that manner. But I've come to this little nest egg of money, and really a lot of it's cash. Some of it's diversified into some stocks. But what I really want to find and locate, and this is the topic of the show today, is an asset class that I can invest that money to hedge inflation. Inflation is going crazy right now. Every price is up, and price is different than inflation. But I don't see prices coming down. I am concerned about the housing market. It's stabilizing, but maintaining those prices. I don't foresee a crash, just because there's so many people who are well qualified purchasing these houses, purchasing them for cash. I don't really foresee a complete crash. I do see some stabilization in the next 9 to 10, maybe 12 months. But it's frustrating, because I am priced out of this market to purchase a house. So that's one thing. So I can take that money and put it in an asset class that's more secure, more long-term, more stable, but I can't, because I'm priced out. Right. And so then I revert to stocks. I look at stocks and I'm like, well, what can I buy in stocks? Well, that shit's so volatile. I don't know what's up. I mean, I was long on Palantir back in November, and I bought shares at $20, $22 a share. And I'm like, holy shit. In fact, 3 months later, March, I'm like $44. Yeah. I'm up like 20% on that thing. And then it's back down to a reasonable price. So I'm really, I think last time I checked, I was only gaining about 2% off that investment. And I bought extra shares too. So I guess I am the confused and limitedly informed investor And it's really challenging for myself, and maybe you can provide some insight on where I can invest my money so that I can hedge inflation, because that's the devaluing of the dollar. Do I buy gold? And like, and really it's come across my mind. Do I buy physical gold versus the paper trading? And, you know, because again, it's nothing is realized until you actually physically see it. I mean, if we have a Holocaust, or not a Holocaust, but a complete crash, and everybody's like coming after each other, and we have like the Walking Dead, an event of life happening out here,
right?
You know, we go to our core assets, your commodities. You know, you're looking for gas, you're looking for food, you're looking for housing. You know, it's just crazy what to kind of apply your money to. And I guess, like I said, I am your most common, confused, and I'm probably a little bit more informed than most society out there. I want to know how to beat this. I want to know how to beat the government, and how to be, how to like protect my little nest egg. And
you know, I think you're showing exactly what we're talking about, and we've been talking about that in the last couple of weeks, right? Is emotions. You're getting very emotional with your money, with your wealth. And it's completely understandable, because you're seeing people make a lot of money here, and they're saying that cash is trash and that you shouldn't have cash, and Bitcoin this and real estate that. And you're
Danielle
getting
says ammo. Danielle says food, water, and ammo.
Yeah, right. Exactly. Get a bunker somewhere, and, you know,
that can be one too. Buy a bunker, don't buy a house. And go to Danielle's house. She's got a lot of ammo.
But anyway, so you have a lot of emotions going through this. I would suggest, you know, so for somebody going through this, is take a step back. Okay. First of all, assess where you're at. Assess where you're at. You know, are you on track, given what you're doing right now? With your savings, how much are you contributing to your savings account and stuff like that? Your cash flow needs. Are you on track for your goals, for retirement, whatever your goals are going to be, short term and long term? Right. And don't get influenced by all the noise. There's a lot of noise out there. There really is a lot of noise. And you know, as this cash comes into people are spending and stuff like that, you're just going to hear more and more of it. It's okay to have some cash, dude. I mean, what I would say is that if you have, you know, a certain percentage right now, because of all this inflation that you're saying and stuff like that, stocks are very good for to outperform inflation in the long run. But I can tell you that in the short run, they're going to take a hit. And so to have a little bit of cash on the side right now until things settle down, and then put that money in, then that's not a bad way to go. That's not a bad way to do it. But because stocks do tend to outperform inflation by quite a bit, more so than gold, more so than a lot of the other asset classes in the long run, right? Gold will do good with inflation in the short run, but the problem with that is that now you're timing things, right? I'm going to get into gold here because inflation is going to jump, and then I'm going to get out when inflation settles. Well, now you have to make two right decisions: when to get in and when to get out. And most people don't know how to do that. It's very hard to do that, even for professional investors. The decision of when to sell is very, very hard. It's a very hard decision of one, because you don't want to cut your gains. You know, you say, I'm going to let this run, I'm going to let this run, I'm going to let this run, and you never get out. Or the other is because if you start taking losses, you don't want to realize those losses, because then, you know, it hurts to realize losses. And so the sell decision is sometimes a lot harder than the buy decision.
Yeah, like I said, it's such a challenge right now to pick which asset class. Matt's saying whiskey. I might need that for afterward to get through some. Yeah. But
that's a consumption option, man. You don't want to invest in that. You want to consume it as much as possible, man.
I was considering like some alcohol stocks to purchase, you know, through this. You know, I was thinking a second wave of COVID, second lockdowns, and I'm like, I mean, that's when I bought Kroger stock, Kroger's groceries, and I mean that's up about 8%. My surprise, I'm looking at my stocks right now. Is Vale, they
iron ore mining.
Yeah, they produce mostly nickel. They're the top nickel producer. And I bought that at a whim. I'm like, whatever. and it's up like almost 15% since I bought it. So I mean, and even Canon, I use Canon cameras, like this camera right here is the Canon camera.
Yes.
And that's up 13%. So it's a challenge because again, I'm trying to push my money where it's going to best serve me, not only in the short term, but the long term too. And like I said, I'm your most common confused investor,
Right.
limited information, and just wants the hot stock tip.
Yeah. Yeah, I know, because that, again, we've talked about this before. That's what sells, that's what gets the attention and things like that. And I'm okay with you if you want to, because what you're doing there is you're kind of doing a very short term, you can say investing. I call it more speculation because you want to beat the market here in the next couple of weeks and months. So as long as you have your long-term plan in place, I don't mind, having a little bit to play with here, but it's more speculation really. Is really what you're doing.
Is there a good whiskey stock to buy, Danielle? Is there Matt?
That's a good whiskey bottle to drink.
Is that, which one's better? Is that Jim Beam? No, is that too commercial?
Yeah.
But we are at the end of the show, sir. Any last words of advice while we head out? Yeah, that's comes right at you. Oh, I should have done the slow. Sorry, I should have done the slow.
Yeah. No, again, I mean, invest. I'm not gonna give any, speculation advice. I would say it's okay to have cash, a little bit of cash, but don't let it be because of too much cash where you're fearful and things like that. Talk to somebody, have a plan and make sure you execute on that plan. So
call Frank, whatever.
Exactly. I'd be more than happy to help.
That's what I do. So I want to thank everybody for coming on. This is Robert, RCO Network, and Frank Ayala from Collars Group. And we're going to come at you every Friday from 12 to 1, pretty much.
As long as I'm not sick, yes, I'll be here.
So we're here every Friday to talk about finances, talk about your questions. If you have any, just go and put them in the comments section. We'll get to them next week. And that's us for now. We'll see you guys later. Be good.
Bye-bye.
Smart investing out there.